Morning, class. Good morning. Good morning,
Good morning,
everyone.
sir.
Good morning, sir.
Yes. Okay. This morning, we shall be looking at stamp duties. We shall be looking at stamp duties this morning. After that, if time permits us, we will look at tax administration in Nigeria. So, and probably on personal income tax, we also look at one question on personal income tax. So we have just like 2 hours. So stamp duties is one of the type of indirect tax. So it's a duties that was leveled on a written document and electronic transaction. It is a duties that was leveled on on a written document, a duty that was paid on a written document and electronic transactions to make it a legal binding, or for the purpose of making it a legal binding, or serve as an evidence in the court of law. When you have a written document like agreement or C of O or share capital, you are expected to pay stamp duty on it. By paying stamp duty, that document has become a legal binding between the two parties involved in the transaction. It has become a legal binding between the two parties involved in the transaction. And it can serve as an evidence in the court of law. That is what stamp duties on. They are the duties imposed or leveled on a written document and electronic transaction for the purpose of making it a legal binding or to serve as an evidence in the court of law. That is what stamp duty means. Now, what are the type of stamp duty that we have? Basically, there are two types of stamp duties. We have fee stamp duties and ad valorem stamp duties. There are two types of stamp duties. Number one of them is called fixed stamp duties, while number two is called ad valorem stamp duties. What is fixed stamp duty? Fixed stamp duty, those are the duties that does not vary based on the value or consideration of the document. In fixed stamp duty, the stamp duty you are going to pay remains the same irrespective of the value, the financial value of that document. The stamp duty you are paying will remain the same irrespective of the financial, either the financial value is 200,000 naira or 500,000 or 20 million, you are still going to pay the same amount of stamp duties. That is the meaning of fixed stamp duties. Example of fixed stamp duties. What are the examples of fixed stamp duties? The example of fixed stamp duties include certificate of occupancy, C of O. We have power of attorney. We have memorandum of understanding. We have joint venture agreements. All these documents that I mentioned, they are example of stamp duty. We also have ordinary agreement receipt. And we have another one called guarantor form. Another example of fixed stamp duty as prosy form. All these are the example of fees stamp duty. Like I said, fee stamp duties, they are those duties that does not vary based on the value or consideration of the documents. So that means they remain fees irrespective of the financial value or financial consideration of the documents. That is what fees stamp duties is talking about. What about another one that we have? The second type of stamp duties. That one is called ad valorem stamp duties. Please, let's try to mute our audio so that we will not distract the class. Second example, second type of stamp duty that we have is called ad valorem stamp duties. Ad valorem stamp duties. What is ad valorem stamp duties? Ad valorem stamp duty, they are those duties in which the amount of consideration varies based on the value of the document. Those are the duties that the amount of the consideration varies based on the value of the document. These duties, the amount you are going to pay for this duty is going to be vary. It will depend on the consideration of the document. It will depend on the value of the document. Please, Mr. Femi, try to mute your audio. You are distracting the class. So it will depend on the consideration of the document. In this case, in the case of ad valorem, the document you want to sign, how much is the value of that document? If the value of that document, the amount in the document worth 300 million, that means the stamp duties too is going to be high. If the amount worth 20 million, the stamp duty will depend on the amount. In ad valorem, the amount of duty you want to pay, the amount of stamp duty you want to pay is going to be vary. It will depend on the value, financial value of the document you want to sign. That is meaning of what ad valorem stamp duties. Example of ad valorem stamp duties. Example of ad valorem stamp duties. We have deed of assignment. Deed of assignment. We have sales agreement. Sales agreement. We have tenancy agreement. Tenancy agreement is part of ad valorem stamp duties. And we also have insurance policy. Insurance policy. Insurance policy. We have contract agreement. We have contract agreement. So apart from that, we also have another one, share capital of a company is an ad valorem stamp duties. Increase in share capital or issue of share capital. When a company issues a share capital, they will pay stamp duty. The stamp duty they will pay will depend on the value of that share capital. And debentures too. Debentures loan is part of ad valorem stamp duties. And we have promissory notes. Promissory note too is part of ad valorem stamp duties. Promissory note too is part of ad valorem stamp duties. So these are the ad valorem example of ad valorem stamp duty. In the I think in the past question, about 3 diet ago or 4 diet ago, a question was asked. You should list 10 instruments or documents that are subjected to stamp duties. 10 instruments or documents that are subjected to stamp duties. In that case, the examiner does not ask you to list either fixed or ad valorem. You have a right to take, to select from any of the type. You can take from ad valorem, you can take from fixed, but it must complete 10. So as a good student, you should know at least 7 fixed stamp duties, and you should know at least 7 ad valorem stamp duties. So that is that. Now, another area we should look at now is administration of stamp duties in Nigeria. Administration of stamp duties in Nigeria. Who administers stamp duties in Nigeria? Who administers stamp duty? In this administration of stamp duty, we are talking about the relevant tax authority that assess and collect stamp duties. We are talking about the relevant tax authority that assess and collect stamp duties. Stamp duty is being administered by both Federal Inland Revenue Service and State Internal Revenue Service. Both Federal Inland Revenue Service and State Internal Revenue Service, they administer stamp duty. For a transaction that involves company, for a transactions that involve companies, if that stamp duty wanted to be paid by the company, the stamp duties is going to be administered by Federal Inland Revenue Service. But if the stamp duties is going to be paid by individual, the stamp duties is going to be administered by State Internal Revenue Service. So, in a nutshell, the administration of stamp duties depends on the nature of the transaction. The administration of stamp duties depends on the nature of the transaction. If the transaction involves company, the stamp duties will be administered by Federal Inland Revenue Service. But if the stamp duties involve individual, the stamp duties will be administered by State Internal Revenue Service. So that is that. Now, the next one is, let's look at the time for stamping and stamping of instrument. What is the timeline for stamping of instrument? Stamp duties is being regulated by Stamp Duty Act. That Stamp Duty Act was last reviewed in Finance Act 2020. The Stamp Duty Act was last reviewed in Finance Act 2020. So, looking at the timing for stamping of instrument, the timing for stamping of instruments depends on the type of the instrument. The timing for stamping of instrument, as stated in the section 23 of the Stamp Duty Act, the timing for stamping of instrument depends on the type of instrument. If the instrument is a fixed stamp duties, if the instrument is a fixed stamp duties, the instrument is expected to be stamped within 40 days from the date of execution of the transaction. If the instrument is a fixed stamp duties, the instrument is expected to be stamped within 40 days from the date of execution of the transaction. But if the instrument is an ad valorem stamp duties, if the instrument is an ad valorem stamp duties, that instrument, that stamp duties is expected to be signed, to be stamped within 30 days from the date of execution of the transaction. Within 30 days from the date of execution of the transaction. So when you want to talk about timing of instrument, you need to let them know that timing of instruments solely depends on the type of the instrument. In the case of fixed stamp duties, fixed stamp duty is expected to be signed, to be stamped within 40 days from the date of execution of the transaction. Why ad valorem stamp duties is expected to be stamped within 30 days from the date of execution of the transaction. So that is the issues on timing for stamp duties. Now, what are the method of stamping or manner of stamping? What method do we use to stamp an instrument or manners of denoting stamp duties? Section 5 of the Stamp Duty Act states the method or forms by which stamp duty may be stamped. Section 5 of the Stamp Duty Act provides the method by which stamp duty may be stamped. Number one method by which stamp duty may be stamped is employing a die impress on an instrument. Employing what? A die impress on an instrument. That one is called adhesive stamp. Employing a die instrument, a die impressed on an instrument. It is called adhesive stamp. Example of a die instrument. In an office, there is a stamp. When you want to stamp a document in an office, some office, they have a die, something like glue, that they will open. They will put their stamp pad on that die and put it on the document. That is a die instrument. Another one is called affixing a printed adhesive stamp. Affixing a printed adhesive stamp. What do we mean by printed adhesive stamp? This printed adhesive stamp is normally issued by the Nigeria Postal Service. In the olden days, when we want to send a letter, we normally buy a stamp, 100 naira, 200 naira. We put it at the edge of the letter. That small stamp that we put at the edge of the envelope that we want to use to send the letter is the printed adhesive stamp. We have another one called electronic printing, direct electronic printing. There are some documents, if they want to stamp it, they will print on that document to show that stamp duty has been paid on the document. There are some documents, if they want to stamp it, they will print on the document to show that stamp duty has been paid on the document. That one is direct electronic printing. We have another one. We have another one. We have another one. We have another one called electronic tagging. This electronic tagging is commonly used in bank. There is a particular tag. If they want to receive a letter, they will put it in that instrument. So it's going to receive it electronically and it's going to give it a code. So that is electronic tagging. And we have another one called issuance of stamp duty certificates. Issuance of stamp duty certificates. Sometimes, if a method of stamping is by the time you pay stamp duties, especially in the case of C of O, if you want to collect, if you want to pay stamp duty on C of O, they will not give you adhesive stamp or electronic tagging. No, they will provide receipt for you. That receipt is called issue and stamp duty certificate that on this building, on this land, stamp duty has been paid. So they will issue stamp duty certificate. So that one is issuance of stamp duties. So it's a method of stamping too. Why the last method of stamping we have is called acknowledgement of payment. Acknowledgement of payment. Acknowledgement of payment. That is the last method. So you can be asked, what are the method of denoting stamp duties? What are the method of denoting stamp duties? As a good student, you need to know at least 5 methods by which stamp duty may be denoted. At least 5 methods by which stamp duty may be denoted. What are the 5 methods by which stamp duty may be denoted? In 5 methods by which stamp duty may be denoted are employing a die impress, employing a die instrument, a die impress on an instrument, affixing a printed adhesive stamp, direct electronic. We have electronic tagging. We have issuance of stamp duty certificate and acknowledgement of payment. These are the 5 methods of stamping. Now, what are the penalties for late stamping? If you fail to stamp within the timeline, what are the penalties? Failure to stamp a document within the timeline, what are the penalties for failure to stamp a document within the timeline? We know the timeline of stamping a document, either 40 days or 30 days. It depends on the type of that instrument. So failure to stamp an instrument within the timeline, failure to stamp an instrument within the timeline, we attract the following penalties. Failure to stamp an instrument within the timeline is going to attract the following. It's not more than 20 naira. When the stamp duty amount is not more than 20 naira, the penalty for late stamping is going to be 20 naira. But when the stamp duty is more than 20 naira, the penalty for late stamping is going to be 20 naira plus interest at prevailing commercial rates. 20 naira plus interest at what? Prevailing commercial rates. So that is a penalty for late stamping. Number one is when the stamp duty value is no more than 20 naira, the penalty for stamping is going to be 20 naira. Then when the stamp duty value is more than 20 naira, the penalty for late stamping is going to be 20 naira plus 10% interest per annum, plus 10% interest per annum. After that 10% interest accumulated to 100%, the 10% interest within 10 years is going to be 100%. After 100%, if the document has not been signed, there will not be additional interest again. The cumulative interest that can be levied on a document that was not signed within the timeline should not be more than 100%. The cumulative document that was, yes, the cumulative interest that will be levied on a document that was not signed within the timeline should not be more than what? 100%. What we are saying is when a stamp duty value is more than 20 naira and we fail to stamp it within the timeline, we are going to pay a penalty of 20 naira plus 10% interest per annum. That 10% interest per annum for the first year is going to be 10%. For the second year, it will be accumulated to what? 20%. For third year, 30%. Fourth year, 40%. Fifth year, 50%. Six, 60%. Seven, 70%. Eight, 80%. Nine, 90%. 10 years, 100%. After 10 years, you cannot add additional interest again after 10 years. You cannot add additional interest again after 10 years. So once it is 10 years, the interest will be 100%. Even if it is 11 years, 12 years, it's still going to remain 100%. So that is penalties for late stamping. That is penalty for late stamping. Now, the next area we should look at is instrument exempted from stamp duty. What are the exempted instruments? What are those instruments that they are exempted from stamp duty? We mean those instruments that you will not pay stamp duty on them. Those instruments that you are not going to pay stamp duty on them. What are those instruments that are exempted from what? Stamp duties. So, number one, admission as military advocates. Admission as military advocates. Admission as military advocates is exempted from stamp duties. It's not going to be subjected to stamp duty. So, admission as military advocates, they are exempted from stamp duties. Admission as military advocates, they are what? Exempted from stamp duties. Another instrument that will be exempted from stamp duty is called affidavit or declaration of age. Affidavit or declaration of age. Affidavit or declaration of age in any other form is also exempted from stamp duties. Affidavit or declaration of age in any other form. Affidavit or declaration of age is also exempted from what? Stamp duties. Another instrument exempted from stamp duty is agreement or memorandum for the hire of any laborer. Agreement or memorandum for the hire of what? Any laborer is also exempted from stamp duties. Transfer of government shares. Transfer of government shares too is also exempted from these stamp duties. So transfers of government shares is also exempted from stamp duties. We also have another one. Any bill like treasury bill, treasury certificates issued by central bank, any bill that is issued by central bank, treasury bill, treasury certificate, they are also exempted from stamp duties. Bill issued by central bank, they are also exempted from stamp duties. So all these are the documents that are exempted from stamp duties. Now, another area we need to look at now is, let's go to the area of what? Objection of stamp duties assessment. Objection of stamp duties assessment. When you are giving assessment of a stamp duty, tax authority assesses you that this is the amount of stamp duty you need to pay. If you are not satisfied with that assessment, you have a power to object. You have a right to object within 21 days after the date of assessment. So objection as regards to stamp duty comes within 21 days after the what? After the date of the assessment. That means you are given a notice of assessment to come and pay stamp duties. That notice of assessment given to you to come and pay stamp duty, you are not satisfied with it. So you have a right to object within how many days? Within 21 days from the date of notice of assessment. So that is what objection is talking about. So that is objection. Now, let's look at the officer in charge of stamp duty. Who is the officer in charge of stamp duty? The officer in charge of stamp duty. Who is the officer in charge of stamp duty? The officer in charge of stamp duty is called Commissioner for Stamp Duties. Commissioner for stamp duties, we have for FRS, we have for LRS. So, Commissioner for stamp duty, we have the one for FRS, we have for what? LRS. So, Commissioner for stamp duties, they are the one responsible to supervise and manage stamp duties on behalf of Federal Inland Revenue Service, in the case of state, on behalf of State Internal Revenue Service. The Commissioner for Stamp Duty of Federal Inland Revenue Service is being appointed by the President, while the one for state is appointed by who? By the governor. Now, what are the functions of Commissioner for Stamp Duties? What are the functions of Commissioner for Stamp Duties? The function of Commissioner for Stamp Duties include General Administration of Stamp Duties Office. General what? Administration of Stamp Duties Office. General Administration of Stamp Duties Office. Another function of Commissioner for Stamp Duty is called Assessment of Duties. Assessment of Duties on Instrument. Assessment of Duties on Instrument. Assessment of duty on instrument. So function of Commissioner for Stamp Duties, that is where we are. General Administration of Stamp Duties Office is one of the functions. Assessment of duties on instrument is another function. And one of the functions of Commissioner for Stamp Duty is called custody of all stamping materials. Custodies of all stamping materials. Custodies of all stamping materials, which include dies and stamp. Commissioner for Stamp Duty also have a function to engage the taxpayer on tax education, to educate the stamp duties payer. He has a function to educate the stamp duties payer. And one of his functions is to also accounting for duty collected. Commissioner for Stamp Duty will also account for duty collected. It's part of the function of Commissioner for Stamp Duties. So these are the function of what? Commissioner for Stamp Duty. So the officer that is responsible for administration of stamp duty is called Commissioner for Stamp Duty. In FRS, we have Commissioner for Stamp Duties. In State Board of Internal Revenue Service, we also have Commissioner for Stamp Duties. The next area we need to go to is called electronic stamping. E-stamping. E-stamping. Electronic stamping is an electronic process of stamping or documentation upon payment of approved duties. Electronic process of stamping an instrument or electronic process of payment of an instrument. It is called electronic stamping. This electronic stamping is going to be done electronically. The method by which we stamp an instrument with the use of IT, electronically, online, is called electronic stamping. Sometimes, some of those documents that we want to pay stamp duty on may be outside Nigeria. They may be outside Nigeria. Those documents, they are executed outside Nigeria, but we want to make payment of stamp duty for them in Nigeria. So we can make use of electronic stamping. So electronic stamping. This electronic stamping is very, very important. So when a document is stamped electronically, it's going to make that document legal binding once you pay the stamp duties on the document. So apart from electronic stamping, another area that we have is called electronic money transfer levy. Electronic money transfer levy. This electronic money transfer levy was introduced by Finance Act 2020. Electronic money transfer levy was introduced by Finance Act 2020, and it was managed by Central Bank of Nigeria. So this is a levy that was imposed on electronic banking transaction. If you want to transfer money fund that exceed 10,000 naira, you will pay electronic transfer levy of 50 naira. Any transfer that the value exceed a sum of 10,000 naira, you are going to pay electronic levy of how much? 50 naira. So this was introduced by Finance Act 2020. This electronic levy of 50 naira paid is going to be managed by the central bank based on the authority of Minister of Finance. And at the end of every year, this money is going to be shared between the two tiers of government, between federal government and state government. For the federal government, they are going to collect 15% of the share of electronic transfer levy, while state government will collect 85% of the electronic transfer levy. Every year, the proceeds of electronic transfer levy is going to be shared between federal and state governments. So that's that. Advantage of e-stamping, advantage of electronic stamping. What are the advantage of electronic stamping? Advantage of e-stamping. What are the advantages of e-stamping? Number one advantages of e-stamping is it is faster, simple, and easy to administer. It is faster, simple, and easy to administer. It is faster, simple, and what? Easy to administer. Another advantage of e-stamping is it enhances accuracy. It enhances accuracy. Another one advantage of e-stamping is e-stamping eliminates corruption through human involvement. E-stamping eliminates corruptions through human involvement. Another one is e-stamping promotes voluntary compliance. E-stamping promotes voluntary compliance. These are the advantages of e-stamping. What are the disadvantages of e-stamping? Disadvantage of e-stamping. E-stamping is not a user-friendly. Illiterate taxpayer or uneducated taxpayer cannot use e-stamping. Anybody that don't know how to use IT cannot use e-stamping. Another problem of e-stamping is problem of internet connectivity. Sometimes the internet may not connect. So, and another problem of e-stamping, disadvantage of e-stamping is that risk of being hacked. Some of the hacker, they may hack the website for that payment of e-stamping to get some information about the payers. So is one of the challenges or disadvantage of e-stamping. So if the internet connectivity problem is not, if the server is down, the internet is not going, there's no how you can make payment of e-stamping. So challenges of ICT infrastructure or challenges of internet connectivity is one of the major problems of e-stamping. Sometimes you want to make payment of tax online. The internet, the server may be down. Their website, you may not have access to the website. So it's challenges of e-stamping. It's a challenges of e-stamping. And sometimes while you are using your ATM card to make payments, some of this information you have inserted into the system, if care is not taken, if your system is not protected, it's prone to hacker, it's prone to cybercrime, all this kind of thing. So these are the disadvantage of e-stamping. So the last area we want to look at on this stamp duties today is called adjudication of stamp duties. Adjudication of stamp duties. Adjudication of stamp duty. What is adjudication of stamp duties? Adjudication of stamp duties is the process of determining the correct amount of duties to be paid by the Commissioner of Stamp Duties. The process that you used to determine the correct amount of stamp duty you are going to pay by the Commissioner for Stamp Duties is called adjudication of stamp duties. That process that you use to determine how much of stamp duty you are going to pay. Who is doing the adjudication? The Commissioner for Stamp Duties will be the one to adjudicate the stamp duty. How do we determine the correct amount of stamp duty you are going to pay on an instrument? It's called adjudication. And that process is being carried out by who? By Commissioner of Stamp Duties. What are the benefits of adjudication? What are the benefits of adjudication? What are the benefits of adjudication? This adjudication, it has a lot of benefits. One of the benefits adjudication has is that it helps tax authority to determine the correct amount of duties to be paid. Tax authority will know the correct amount of stamp duty that you are going to pay. That is on adjudication. The correct amount of stamp duty you are going to pay is going to be determined by who? Tax authority. That is adjudication. Another advantage of this adjudication is it shows that the document is genuine. It shows that the document is what? Genuine. And adjudication also shows that that document certified statutory requirements. Adjudication also shows that that document certified statutory what? Requirements. So that's benefit of adjudication. It shows that the document certified statutory requirement is one of the benefits of adjudication. So the next area we should look at for the sake of time, so that we can move to the next topic. Let's look at the area of right of a taxpayer in respect of stamp duty assessment. Right of a taxpayer in respect of stamp duties assessment. What are the rights of a taxpayer in respect of stamp duties assessment? If you want to determine stamp duties assessment, what rights a taxpayer have? The person paying the stamp duty, what does the taxpayer have? Number one right taxpayer have is right to apply for adjudication from Commissioner of Stamp Duties. Right to apply for adjudication from Commissioner of Stamp Duties. That is number one right of a taxpayer. Number two right to appeal against any duty assessment. Right to appeal against any duties assessment. You know, if you are given a notice of assessment on a stamp duty, you have a right to appeal within 21 days from the date of the assessment. You have a right to appeal within 21 days from the date of what? Assessment. Another one is right to be educated. So the taxpayer have a right to ask the tax authority, which is Commissioner for Stamp Duty, to educate them on any new provision of the Stamp Duty Act. any new changes of stamp duty acts. So these are the rights of a taxpayer. Now, what is instrument not properly stamped? If an instrument is not properly stamped, what are the implications? When an instrument is not properly stamped, what are the implications of that instrument not properly stamped? If an instrument is not properly stamped, such instrument that is not duly stamped in accordance with the law in force at the time of it was first executed shall not be given. That instrument, if it's not properly stamped, you cannot tender that instrument as an evidence in the court of law. That instrument cannot be tendered as an evidence in the court of law. And if an instrument is not properly stamped, that instrument may not be administrable for collateral purpose. If an instrument is not properly stamped, you cannot use the instrument as a collateral purpose. That means you cannot use the instrument as a collateral security while you want to obtain loan in bank or any other financial institution, or you want to get any financial assistance. You can't use that instrument if it's not properly stamped. Another one is if an instrument is not properly stamped, cross-examination upon unstamped document is not allowed. Cross-examination upon unstamped document is not allowed when an instrument is not properly stamped. The other area we need to look at is called exemption to admissibility rule. Exemption to the admissibility rule. If any unstamped instrument or an instrument that was not properly stamped, there are some time, even if that instrument is not properly stamped, that instrument can be used, can be administered for some purpose. Even if this instrument is not properly stamped, it may be administered, it may be admitted under the following condition. If that instrument is not properly stamped, that instrument may be used under this following condition. Number one is instrument tender in evidence in criminal proceeding. Even if that instrument is not properly stamped, that instrument may be used in criminal proceeding. That improper stamp does not mean it cannot be used. What we mean by improper stamp means the right amount of stamp duties is not paid on the instrument. Improper stamp means the right amount of stamp duties is not paid on the instrument. When the right amount of stamp duty is not paid on the instrument, that one does not mean the instrument cannot be used as an evidence to be admitted in the case of criminal proceeding. So another one is when an instrument needed to be, when you need the instrument to prove as an act of bankruptcy, you needed the instrument to prove as an act of what? Bankruptcy. That means when you want to prove that somebody is bankrupt and that instrument can be used as an evidence, you can use that instrument. When the instrument is used to prove a fraud case, even if the instrument is not properly stamped, you can still use the instruments. For the sake of time, let's look at some other offenses and penalties that relate to stamp duties. Offenses and penalties under Stamp Duties Act. We have mentioned earlier the offenses for late stamping, which is 20 naira if the stamp duties amount is not more than 20 naira. But if the stamp duty amount is more than 20 naira, the penalty for late stamping will be 20 naira plus 10% interest per annum. What are those other offenses? One of other offenses that we have in respect of stamp duty is failure to disclose all the relevant facts or circumstances on an instrument. In that case, the offense is 40 naira on conviction. The offense is 40 naira on conviction. So all these are the penalties related to stamping of instrument. All these are the penalties related to stamping of instrument. So the last we are going to look at on this Stamp Duty Act, the last area we are going to look at on this Stamp Duty Act, so that we move to tax administration. The last area we are going to look at on this Stamp Duties Act is what are the challenges of stamp duties administration in Nigeria? What are the challenges of stamp duties administration in Nigeria? What are the challenges of stamp duties administration in Nigeria? You know. The challenges of stamp duty administration in Nigeria. One of the challenges is the area of appointment of commissioner for stamp duties. The Stamp Duty Act did not state the qualification for commissioner for stamp duties. The Stamp Duty Act did not state the qualification for what? For the commissioner for stamp duties. That if you want to become a commissioner for stamp duties, so you have to have social and for somebody to be a commissioner for stamp duty, you have to have experience in the field of taxation. But the act does not specify that this is the qualification required for commissioner for stamp duties. Again, one of the challenges we have is the act does not make provision for enforcement of non-admissibility of unstamped instruments. The act does not make provision for enforcement of what? Non-admissibility of unstamped instruments. So I'm thinking that if there's any review of Stamp Duty Act in the future, I think that area should be dealt with. So we should look at that area on how do we look at if his document is not administrable. So what are the necessary enforcement that we need to enforce? How do we enforce it to ensure that the document is administrable? Another one is fake stamp duty instrument is being accepted for registration. This one is talking about there is no modality where you can verify the authenticity of that stamp duty payment within the tax authority. If somebody said he has paid for stamp duty, how do you verify whether this payment is genuine payment or fake payment? So there is no channel where you can trace the authenticity of this stamp duties payments. So that is one of the challenges of stamp duty that we have in Nigeria. Another one. So this is on stamp duties. While looking at these stamp duties, we may proceed to go to another topic called tax administration in Nigeria. So before we go to the tax administration, we can have like 5-minute break. So the next area we need to look at now is tax administration in Nigeria. Tax administration in Nigeria. What do we mean by tax administration? Tax administration is the management, administration, supervision, and application of tax law in the country. The process of management, administration, direction, supervision, and application of tax law in the country is called tax administration. The process of management, administration, supervision, and application of tax law. Tax administration also involves registration, assessment, collection, and compliance with what? Tax law. Registration, assessment, collection, and compliance with tax law. And when we talk about tax administrations too, it also involves enforcement of tax law. Who enforce the tax law? Who collect the tax? Who assess the tax? They are the tax administration. Now, what are the functions of tax administration? This function of tax administration simply means the tax authority, those who administer tax in Nigeria, those bodies that administer tax in Nigeria, what are their functions? What are the functions of the body that administer tax, that collect tax, that enforce compliance with tax law? What are their functions? One of the functions of tax administration is called what? Registration of taxpayer. This is number one function of tax administration. One of the things that tax authorities do, either FRS or LRS, they register taxpayer. If FRS want to register taxpayer, they will assign TIN number to the taxpayer. They will assign what? TIN number to the taxpayer. TIN number is going to be assigned to the taxpayer. Another one is assessment of taxpayer. Assessment of what? Taxpayer. Tax authority, they assess the taxpayer to determine the amount taxpayer need to pay as tax liability. They assess them. They compute the amount of tax that they will pay as a tax liability. So assessment of taxpayers too is one of the functions of tax administration. One of the functions of tax administration is also include tax return. Tax return. Tax administration, tax authority, they review the return, the tax return submitted by the taxpayer. The tax return submitted by the taxpayer, they review it. Some of the return, they are monthly, while some return are annual. Like VAT return is a monthly return, 21 days of the following month. While company income tax return is an annual return, 6 months after the end of the year. Another function of tax administration is tax collection. They collect tax from the taxpayer. They ensure that taxpayer make payment of tax. They ensure that taxpayer, they make payment of what? Tax. It's another function of tax administration. Another function of tax administration is compliance monitoring. They monitor the taxpayer to ensure that they comply with the tax law. tax administration monitor the taxpayer to ensure that they comply with what? Tax law. Compliance monitoring is one of the key functions of tax administration. Another function of tax administration is called compliance enforcement. They enforce the tax law on the taxpayer. If any of the taxpayer fail to pay, they enforce on them. They enforce them to pay. They prosecute them. They take them to court. They place lien on their properties. So compliance enforcement is another function of tax administration. Another function of tax administration that we have is called sanction. If there is any contravention of the provision of tax law, tax administration ensures that anybody that contravenes the provision of tax law will be sanctioned appropriately. They sanction them appropriately. This is one of the functions of tax administration. Why another function of tax administration is tax education and awareness. Tax education and awareness. They educate the taxpayer on the new tax law, on the changes in the tax provision. Tax authority educate them. They educate the taxpayer on the new tax law, on the changes in the tax provision. So tax authority, they are the one that do that. So it's another function. Like I said, if they ask you what are the function of tax administration or function of tax authority, number one function of tax administration or tax authority is what? Registration of taxpayer. Number two is assessment of taxpayer. Number three is review the tax return. While number four, collection of tax. Number five is compliance monitoring. Number five is what? Compliance monitoring. Why number six, compliance enforcement. Compliance enforcement. Tax education and awareness too is one of the function of tax administration. Now, what are the relevant tax authority that we have in Nigeria? The relevant tax authority that we have in Nigeria. The relevant tax authority that we have in Nigeria, there are majorly three tax authority that we have in Nigeria. The tax authority that we have in Nigeria, they are majorly in three. Number one is what? The one that is at the federal government, at the federal level, the one that is owned by the federal government. That one is called Federal Inland Revenue Service. While number two, the one that is owned by the state government, that one is called State Internal Revenue Service. While the last one is the one that is owned by the local government, that one is called Local Government Revenue Committee. Apart from these three tax administration, we have another tax administration that is called Joint Tax Board. Apart from these three major tax administration that is established by each tiers of government, we have another tax administration that is called what? Joint Tax Board. We have another tax administration that is called Joint Tax Board. The tax administration established at the federal level is called Federal Inland Revenue Service, while the tax administration established at the state level is called State Internal Revenue Service. The tax administration established at the local government level is called Local Government Revenue Committee. Now, let's look at Federal Inland Revenue Service. Federal Inland Revenue Service, they are the tax authority created by who? What law that created Federal Inland Revenue Service? Company Income Tax Act was the law, one of the law that created Federal Inland Revenue Service. And there is another law that was used to establish Federal Inland Revenue Service. That law is called Federal Inland Revenue Service Establishment Act of 2007. Federal Inland Revenue Service Establishment Act of 2007. Now, what are the composition of Federal Inland Revenue Board? The composition of Federal Inland Revenue Board. Board of Federal Inland Revenue consists of the executive chairman. That executive chairman of Federal Inland Revenue must be person that is experienced in taxation, and that executive chairman must be appointed by who? By the president. The revenue service must be appointed by the president. Subject to confirmation of the Senate. Apart from that, the other board member of the Federal Inland Revenue Services, there will be a 6th member. This 6th member will have qualification in taxation, and they are going to represent the 6th geopolitical zone that we have in Nigeria. Like I said, number 1, board of Federal Inland Revenue Service. When you are looking at the composition of the board, number 1 person is chairman of Federal Inland Revenue Service. While number 2 is 6 member with relevant qualification appointed by the president to represent the 6th geopolitical zone. Aside from that, a representative of Attorney General of the Federation, while the representative of Central Bank of Nigeria is part of the board member of FRS board. A representative of Minister of Finance too will be part of the board member, while the representative of Group Managing Director of NNPC too will be part of the what? Board member. So these are the board member of FRS. What are the power or duty of FRS board? FRS. So what are the function of, if you are asked, what are the function of FRS? One of the function of FRS is registration of taxpayer, assessment of taxpayer, review tax return, tax collection, and so on like that. But if you are asked, what are the FRS board, the board of FRS, what are their function or power? One of the power of FRS board is to provide general guidelines relating to the function of the service. One of the function of FRS board is to provide general guidelines relating to the function of the service. Another function is to review and approve strategic plan of the service. Another function of FRS board is to review and approve strategic plan of the service. Why another power or function of FRS board is to manage and superintend policy of the service on a matter relating to administration of revenue, assessment, collection, and accounting system. That is another function of FRS board. Another function of FRS board is to stimulate remuneration, allowances, benefits, pension of the staff and employee in consultation with who? National Salary, Income and Wages Commission. Another function of the board is to ensure efficient performance of the function of the service. Ladies and gentlemen, you need to know the difference between FRS service and FRS board. If you are asked, what are the functions of Federal Inland Revenue Service? Registration of taxpayer, assessment of taxpayer, collection of tax, review tax return, enforce compliance, monitor compliance, enforce compliance, sanction, education of taxpayer. That is service. But if you are asked, what are the power or function of FRS board? Those functions of FRS board, they are provision of general guidelines relating to the function of the service, management and superintend the policy of service on matter relating to what? Administration of revenue, assessment, collection, accounting system under the arts. While another function is to review and approve strategic plan of the service. Another function is to employ and determine the condition of service. Another function is to simulate remuneration, allowance, benefit, pension of the service and employee in consultation with National Salary, Income and Wages Commission. These are the functions of FRS service. We have looked at the function. We have looked at the composition of the board. So, ladies and gentlemen, you need to know 5 functions of FRS service board. What are the composition of the board of FRS service board? The composition comprises of the chairman appointed by the president, 6 members representing each 6 geopolitical zone, representative of Attorney General of the Federation, representative of Minister of Finance, representative of Governor of the Central Bank. These are the composition of the member. Let's go to State Internal Revenue Board. State Internal Revenue Board. SRS Board. State Internal Revenue Board is established by Personal Income Tax Act because they are the ones that administer personal income tax. This State Internal Revenue Board, what are the composition? Is going to comprise of the chairman. The chairman of State Internal Revenue Board is going to be appointed by who? Appointed by the state governor. Chairman of State Internal Revenue Board is going to be appointed by who? By the state governor. Acts of the state on their personal merit will be part of the composition of State Internal Revenue Board. All the director of State Internal Revenue Service, they are part of the board member. Why one director for the State Ministry of Finance is going to be part of the board member. What are the functions of State Internal Revenue Board? Function of State Internal Revenue Board. Function of State Internal Revenue Board. If you are asking, what are the functions of State Internal Revenue Service? Function of State Internal Revenue Service is the same thing as function of tax administration, like registration of taxpayer, assessment of taxpayer, collection of tax, review tax return, enforce compliance, monitor compliance, tax education. That is function of state internal revenue service. But if they ask you, what are the function of state internal revenue board? State internal revenue board. What are the function of state internal revenue board? Function of state internal revenue board. Number one function of state internal revenue board is ensure effectiveness and optimum collection of all taxes and penalty due to the government under the relevant law. Number one function, let me repeat again. Ensure effectiveness and optimum collection of all taxes and penalty due to the government under the relevant law. Make recommendation where appropriate to the Joint Tax Board on tax policy, tax reform, tax legislation, and tax treaty and exemption. Make recommendation where appropriate to the Joint Tax Board on tax policy, tax reform, tax registration, tax treaty, and tax exemption where appropriate. Generally controlling the management of the service on a matter of policy subject to provision of the law setting up the service. Controlling the management of service on a matter of policy subject to the provision of the law setting up the service. Why another function of State Internal Revenue Service Board is appointing, promoting, transferring, impose discipline on employee of the state service. Appointing, promoting, transferring, impose discipline on employee of the state service. These are the function of State Internal Revenue Board. Let's look at Joint Tax Board. Joint Tax Board is another tax authority that we have. This Joint Tax Board was established by Section 85 of Personal Income Tax Act. The Section 85 of Personal Income Tax Act established Joint Tax Board. Why do we have Joint Tax Board? Joint Tax Board is established to mediate or settle disputes between state tax authority and federal tax authority in case of dispute. If Federal Inland Revenue Service and State Internal Revenue Service, they are having disputes, who is going to settle it for them? Joint Tax Board. Or if Lagos State Internal Revenue Service and Ogun State Internal Revenue Service, they are having disputes as per collection of personal income tax. Maybe Ogun State feel that the workers, those who are working in Lagos State, residing in Ogun State, they are the ones that are supposed to be collecting the tax, not Lagos State. If there is a dispute, who is going to settle it among them? Joint Tax Board. So, Joint Tax Board. This Joint Tax Board, if you look at the composition, it comprises of a chairman. The chairman of Joint Tax Board is automatically the chairman of Federal Inland Revenue Service. Is automatically the chairman of Joint Tax Board. Apart from the chairman, every state will nominate one person. Every 36 states we have in Nigeria is going to nominate one person to represent them in the board of joint tax board. Every state is going to nominate one member that will represent them in the joint tax board. Now, what are the functions of joint tax board? What are the functions of joint tax board? Number one function of joint tax board is advising all tiers of government on a tax matter. They advise the federal government on a tax matter. They advise state government on a tax matter. They also advise what? Local government on a tax matter. Another function of joint tax board is resolving area of conflict on tax jurisdiction among the member of the state. Resolving area of conflict on tax jurisdiction among the member of the state. It's another function of joint tax board. Another function of joint tax board is they impose its decision on a matter of procedure and interpretation of decree on any state for the purpose of conforming to the agreed procedure. Is another function of joint tax board. Another function of joint tax board is the process for approval decision on providence fund scheme to be recognized as tax allowance. It is joint tax board that will agree that pension contribution, NHF, NHIF, life assurance policy should be used as tax exemption. This tax relief, consolidated relief allowance, which is 200,000 or 1% of gross income plus 20% of gross income, who determine that? Who determine that rate of the relief? It is joint tax board. It is joint tax board. It is published by joint tax board. Another function of joint tax board is resolving any dispute in the determination of residence between taxpayer and tax authority. If there is dispute between determination of residence between taxpayer and tax authority, who is going to resolve it? Joint tax board. About 6 years ago or 7 years ago, maybe like 8 years ago, Lagos state government and Ogun state government have a dispute about resident tax, which is personal income tax. Ogun state think that they are the one that's supposed to be collecting tax of their resident, because based on the research Ogun state government did, most of the residents, especially in the boundary of Lagos to Ogun state, most of the people residing in Ogun state, most of them, they are paying their personal income tax to Lagos state. And we know that personal income tax is based on residential rule. Residential rule simply means the state you are residing, that is where you should remit your personal income tax to, not the state that you are receiving the income. So Ogun state now discovered that 80% of those who are residing in Ogun state, they are remitting their tax to Lagos state. They have to take Lagos state to court. At the end of the day, it is joint tax board that help them to resolve it. That, Lagos state, if you know that this person is residing on Ogun state, don't enforce tax on him. You understand? Ensure that that person pay his tax to Ogun state government, not Lagos state government. Because personal income tax is based on what? Residential rule. The state that you reside, that is the state you will remit your personal income. Who is so joint tax board? They will be the one that will settle this kind of dispute between any tax authority. So these are the function of a joint tax board. Now let's look at another tax authority that is called Local Government Revenue Committee. Local Government what? Revenue Committee. This Local Government Revenue Committee, it is the tax authority at the local government level. It is the one in charge of collection of taxes and levy of the local government. This Local Government Revenue Committee is also set up by Personal Income Tax Act. It is Personal Income Tax Act that set up Local Government Revenue Committee. They are empowered to collect taxes and levy on behalf of who? On behalf of local government. All the taxes and levy collected by local government, those bodies that were responsible for the collection is called Local Government Revenue Committee. What are the composition of the Board of Local Government Revenue Committee? Local Government Revenue Committee has a chairman. One of the board members is called the chairman. The chairman of the Local Government Revenue Committee is the supervisor for what? For finance. Supervisor for finance. The chairman of Local Government Revenue Committee is the supervisor for what? For finance. Apart from the chairman, 2 persons nominated by the chairman of the local government will be the member of the committee. 2 persons nominated by the chairman. 2 persons nominated by the chairman of the local government will be the member of Local Government Revenue Committee. And 3 local government councillors too will be part of the member of Local Government Revenue Committee. What are the functions of Local Government Revenue Committee? Function of Local Government Revenue Committee. One of their functions is assessment and collection of all taxes, fine, and rates under local government or any other taxes as prescribed by them to them by the chairman of the local government. Assessment and collection of all taxes, fines, and what? Rates under the local government. Another function of Local Government Revenue Committee is they have autonomous of the local government treasury. They are responsible for day-to-day administration of department, local government department, which is the finance department. They are responsible for day-to-day administration of local government finance department. Local Government Revenue Committee also advise local governments on a tax-related matter. They also advise local governments on a tax-related matter. They advise local governments on a tax-related matter. This is one of the functions of Local Government Revenue Committee. So these are the functions. Now, efficiency of tax administration. How do we determine whether tax administration they are efficient? Efficiency of tax administration. How do we determine the efficiency of tax administration? How do we determine whether the tax administration function is efficient? All those functions of tax administration we mentioned earlier, how do we determine that they are efficient? In ensuring that their tax administration function is efficient, the following has to take place. Number 1 is prompt payment processing and collection of tax. Payment processing and collection of tax. Tax should be collected. The payment of tax should be processed, and the amount of tax should be collected at the right time. Another efficiency of tax administration is record keeping. Tax authorities should keep tax record. They should maintain book and record of tax. They should know the amount of taxes each of the taxpayers supposed to collect. By doing this, it will make their function to be efficient. Exchange of information. Tax authority should exchange information among themselves. They should give out information among themselves about their taxpayer so that they will know the history of the taxpayer. Exchange of information. Enforcement of tax law. Tax authorities should enforce tax law. If they want their function to be efficient, they should enforce the tax law. Anytime there's a new tax law, they should ensure that taxpayer follow it. They enforce it. If any of the taxpayers fail to follow the tax law, they should prosecute them, sanction them. Adequate funding of tax authority. Tax authority should be adequately funded. If you want efficient tax administration, if you want tax authority to perform their function efficiently, fund them, give them good allowance, good salary, good remuneration. Good remuneration is going to encourage them to perform efficiently. It's going to encourage them to generate more revenue. Another function of tax administration, another efficiency of tax administration is funding for tax refund. If a taxpayer requests for tax refund in the case of overpayment of tax, give them the tax refund. Don't say that they are not entitled to collect tax return. If you give them the tax refund, they will have confidence on the tax administration. In the long run, they will be paying tax. Another efficiency of tax administration is revenue autonomy. Give autonomy to the tax authority. Let tax authorities stand on their own. Don't let tax authority depend on other arms of government or other any ministry. Don't let tax authority fall under any ministry. Let tax authority be an agency on its own that is dependent. Provide funds for them to run the administration. All this will enhance efficiency of tax administration. All this will enhance efficiency of what? Tax administration. Let me repeat it again. One of the efficiency of tax administration is payment processing and collection. Number 2, record keeping. Number 3, exchange of information. While number 4, enforcement of tax law. Number 5, funding of tax authority. Number 6, efficiency of tax administration is funding for tax refund. Easy paying of tax. Revenue autonomy. All these are efficiency of tax administration. Now, what are the challenges of tax administration in Nigeria? These tax administration people, tax authority, FRS, LRS, local government revenue committee, what are the challenges that they faced? Or what are the challenges that they are from their own end? What are the problems that they created by themselves? Number 1 challenges is lack of overall understanding of role of taxation in national development. People don't know the importance of tax. The taxpayer don't know the importance of paying tax. So they feel that, why are we paying tax? Some people even have it in mind that, well, the tax that government have been collecting in the past, what government are using the tax for? Do we have any evidence of what government have used our tax for in the past? So why are we paying? So people don't know the importance of tax, the role of taxation. One of the pre-research work is the role of taxation in the contribution of economic development. This one is talking about how tax contribute to economic development in Nigeria. Is one of the researchable topic. The impact of taxation on the growth and economic development of Nigeria. How tax contribute to the growth and economic development of Nigeria. In this, we are looking at what government have used tax revenue for. They have used tax revenue to construct Third Mainland Bridge. They have used tax revenue to construct Lagos Calabar Coastal Road. They have used tax revenue to construct so many Lagos Ibadan Expressway. They have used tax revenue to build more hospitals, to build more schools, to provide securities. Another challenges of tax administration, dependence on oil revenue. For 6 years ago or 7 years ago, federal government, they depend solely on oil revenue. They depend on revenue coming from crude oil. Other area of tax, like company income tax, they don't enforce it. They don't improve it. They depend. But as I'm talking to you right now, there's a dynamic change. There's paradigm shift now. Government now, because of the dwindling in the price of crude oil internationally, price of crude oil is going down. Nigeria government now, they are now focusing on non-oil revenue. One of the non-oil revenue Nigeria government introduced was stamp duty, electronic stamp duty, which is 50 naira for every transaction above 10,000 naira. Can you imagine how much revenue government will be collecting from these electronic stamp duties in a year? I pay electronic stamp duty, you pay, everybody pay. If you have bank account, unless you don't send money, you will pay this electronic stamp duty. If you calculate how much electronic stamp duty you pay in a month, some people, they can pay like 2,000 electronic stamp duty in a month. Some can pay 1,000, some can pay 3,000, depending on the volume of transaction that they did. It's one of the non-oil revenue, non-oil tax. Lack of, another challenges of tax administration that we have is lack of sufficient political support. Government does not support tax administration. They don't support tax administration at all. Low level of voluntary compliance. People don't comply with the tax law voluntarily. They don't comply with the tax law voluntarily. The informal sector, the artisan, radionic, electrician, bricklayer, one-man business, these people, they are the ones that evade tax too much because we don't know how to capture them in the tax net. Some of them, they will earn revenue, they will not disclose it to government. Can you imagine you have a plumber that come and help you to repair your tap? You pay him 10,000 naira. Does the plumber going to report the 10,000 naira part of his revenue? No. In a year, we just pay a little tax. But me and you, that we are working as an employee in a company, there is nowhere we can hide. Our employer normally deduct the right tax from our salary. But those in the informal sector, those who are doing their business, or those professionals that have their own handwork, they evade tax a lot. Multiple taxation is one of the challenges of tax in Nigeria. And corruption of the tax officials too. The tax officials too, they are corrupt. They undermine government revenue. They collide with taxpayer. If they know that this taxpayer is supposed to pay additional assessment of 50 million, they will say, go and pay 15 million. You have to give us something. 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 15 million. You have to give us someth they are undermining the government revenue. It's a challenges of tax administration in Nigeria. So all these are the challenges of tax administration in Nigeria. So, ladies and gentlemen, this is where we are going to stop today. So, by God's grace, this kind of class, if time permits us, we are going to still hold this kind of class again. When we want to hold this kind of class again, is a joint class of VI student and our online student. We are going to talk about education tasks. So maybe during the holiday in the Easter, we are going to hold this kind of class again. Any question, any issue, any observation? Any question, any issue, any observation?